building rentals as your first investment might be a bad mistake. You've heard people say build rentals and you'll never struggle again. The allure of passive income, property appreciating, and tenants paying your bills each and every month. On paper, it sounds good, but the reality is very different. I'm going to share the truth with you in this particular video, not because rentals are bad, but there are key nuances to it. You are all much welcome to my channel. My name is Afagza Sifuna. In case you are new here, subscribe and also drop a like on this video. Having said that, the very first thing you need to consider is that rentals lock up a huge amount of your money. Many people, of course, when they get some money, let me say, for example, 5 million shillings, they're going to think, I can buy land, I can build rentals, and then everything is going to be okay. The truth is that construction takes time. More so, if you don't have sufficient amount of money, you can even take 2 years, 5 years, even sometimes longer for you to complete construction. Remember, as you are doing this, your money isn't earning anything. Your money is in cement, in bricks, in steel, in labor. Meanwhile, inflation keeps going up. You become asset rich, but cash poor. And then the second thing is that construction costs always go up. Very few construction projects finish on budget. Prices change. Steel cost rises. Cement cost increases. Labor cost increase. All these are actually things that are going to drive your construction cost up. And of course, unexpected problems along the way. A simple construction plan of maybe 5 million shillings can even end up costing you 7 million shillings. And if you don't have sufficient amount of money or you didn't plan well, you'll end up borrowing or even, unfortunately, stop construction halfway. And that is going to lock your money. The third thing is that rental income is usually lower than people expect. The allure of being outside, assuming once you construct, you're going to be able to make insane amount of money, unfortunately, isn't the case. Even assuming you construct 20 units of houses, each of them giving you 10K each and every month, that is 200,000. Okay? But the reality is that occupancy is not always 100%. Talk about vacant units. Talk about repairs, painting, leaks, security requirement, garbage collection, you name it. All these are hidden costs which most people don't look at upfront before they get into rental units construction. And of course, people out there assume that this is something they're going to be doing passively. It won't have any costs. Unfortunately, it has costs, and even your actual income might be much lower than your estimated rental income. And then the fourth thing you need to know is that it can take many years to recover your money. When you look at the real estate, breaking even point or time it takes to recover your money is sometimes even upwards of 10 years. Imagine you sinking 10 million shillings, okay? Each and every month, maybe you're getting rental income of 700,000 Kenya shillings. Yes, that is good money. But remember, you didn't sink upwards of 10 million in the construction, meaning it's going to take you more than 10 years to recover your investment. And yet there are other investments out there which can give you money at a much faster rate. And then the fifth thing to consider is that you starting with one property and being your first investment is poor diversification. If I have, for example, 10 million shillings, I'd rather put that in a different portfolio setting compared to committing it to one construction project and hoping it's going to give me money. What if the economy slows down? What if road construction affects the construction? What if there's reduced demand? Your entire investment suffers. That is why smart investors spread risk across different assets or investments. And then the sixth thing you need to consider is that rentals are not truly passive income. People out there assume once I construct, I'm going to just be chilling and money is going to be coming. No, guys. There is property management. There is even some failures on items, toilet leaking, people moving out, some people not even paying rent, some people damaging your housing units, some people even complaining about neighbors, you getting phone calls almost every day in the evening or night. These are realities of landlords out there. That's why you shouldn't assume rental units are passive income. And then the seventh thing for you to consider is that there are probably better investments out there, and the better investments could come first. Before building rentals, consider building your financial foundation. For example, do you have emergency fund before you commit all your money to rental units? Have you put your money, for example, in money markets, in treasury bills, in treasury bonds, and also dividend paying stocks? All these are possible investments you could look to jump onto for you to be able to start making money while also preserving your capital, instead of just jumping on building rental units, which is going to take time, more so if you need liquidity. And remember, these alternative investments typically require less capital for you to get started, and you start making money as soon as you invest in them. Of course, we appreciate market volatility, but then again, you can be able to make money through these alternative investments compared to you jumping on rental units right upfront. Of course, I'm not taking anything away from rentals. Of course, rentals are excellent and ideal for you. If, for example, you already have diversified investments, you have a stable income, you're not just banking on the income from rental units. Construction won't consume all your savings. You have alternative investments or savings. You can comfortably manage vacancies or low occupancy in rentals, and you can survive for months or even a year or two without rental income. With that, that is going to be your ideal setting for you to build rentals. Of course, building rentals isn't a bad investment. Building rentals as your first investment often is. Focus on building capital first. Invest in assets that grow your wealth and keep your money liquid because you need liquidity. Then, when the time is right, you can jump on building rental units, because building rentals from a position of financial strength is key, as opposed to you building rental units from a position of financial weakness or financial pressure. In case you have invested in rental units before, how did you go about it? Was it your first investment? Was it part of you adding investments in your portfolio? Did you build rentals from your savings? Did you build rentals over years? In case you did, how long did it take you to build your first rental unit? And even so, beyond that, did you borrow money to finish your construction? Or did your construction complete within the desired period and within the budget? All these are nuances, and also most importantly, I'm curious to understand. After you finish constructing your rental unit, or even so purchasing a rental unit out there, or apartment, or a house which did turn to a rental unit, how long did it take for you to be able to recover your initial investment? I'd like to discuss with you down below in the comment section, because most people out there might assume this video is made from the light of not really knowing the details around rentals. But my experience tells me you building rental as a first investment could really drain you big time. Share down below. In case it was a first investment, did it drain you? How did you bounce back? And do you advise people out there to build rental as their first investment, or you advise them to look at alternative investments? Comment down below. Let's continue discussing. Cheers, guys, and y'all stay safe.